received with Ford and Lincoln this year. We received the President's Award for 2023 for Ford for the 5th year in a row. We also received it for Lincoln for the first year. And I tell you, those awards don't come easily. It all boils down to taking care of the customers and having the vehicles you want in stock for you to buy.
The following is a paid program and does not necessarily reflect the views of WSIC.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. 4 o'clock hour. If you're a 9 to 5er, you got 53 minutes and 40 seconds until we get to the finish line. Appreciate so much you sharing that time with us here as we give attention here on Dollars and Cents to all things financial and economic, kinds of things that may be part of your experience, things you're seeing in the headlines, perhaps something that will be coming up for you. Maybe something that hasn't been on your radar screen to this point, but maybe something that you want to keep on your radar screen in case it comes up sometime in the future. But in doing so, you remember as a previous listener to Dollars and Cents that, well, again, as we're talking on companies, we're going to be doing it again here today. I promise you, we've got a bunch of them that are sitting out there that we're going to be talking about companies, some of the positive light, some of the negative light, maybe in terms of where they are earnings-wise, business-wise, where things are in the cycle. That in doing so, nothing is intended as a specific recommendation for you. Meaning that even though as we're getting into these things, that we're talking about investment styles, maybe talking about funds, maybe ETFs, maybe management companies, investment advisors, and in doing that, that again, everybody's situation is unique. You want to make sure that you reach out to your tax advisor, to your financial advisor, or if you'd like to reach out to us at North Main Financial Group, love to hear from you. Love to chat about your particular financial situation, see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, Main like the street, financial.com, northmainfinancial.com. We got a contact page on there. Leave us an email address or a phone number. Let us know the most preferred and desirable ways for us to contact you, again, at northmainfinancial.com. Let's get into it. We got a lot on. This is the What's Hot segment. There's a lot that's going on right now. We say that every week, I guess, right? I mean, I used to think, there's some ebb and flow. I used to even think that in the investment universe that there was some more calm during the summertime and that things really ramped up during the school year months. Not anymore. It's 24/7, 365 for sure. And so it's a sprint. We're on the back end of earnings season at this point. We're talking about a couple of companies that came out with earnings. Some, again, more positive, some not so positive. We're going to be talking about those in a bit. But I got to talk about a big number to start here. And I'm going to get a little academic on you. Stay with me. I promise not to bore you to tears as we're thinking about these kinds of things because we got to talk about it. It does have an impact on us, at least in a tertiary way. So let's get into it. Talking about number 818,000. It's talked about a little bit on Good Morning LKN, which, by the way, if you're not listening to Good Morning LKN, Monday to Friday, 7 to 9 a.m., Mamie, Justin, Bill, make sure you're doing that. If you're not within radio range of us on the signal here, jump over there to the Google store, to the Apple store, pick up the WSIC app. It's free. You can listen to it no matter where you are. And it's a great way, not only with current shows, but also with past shows. Make sure you take a look at that, again, with the WSIC app on the Apple store and Google store. But this morning on Good Morning LKN, I think they were talking about this big number, 818,000. And you say, okay, what's 818,000? What does that have to do with me? Fair point. It was actually a revision number. Now, when I say revision number, understand that whenever we're getting statistics from just about every federal agency that's out there with consistency, when I say that, meaning those agencies which are reporting data weekly, some even monthly, that there are almost always revisions. Sometimes that's coming 2 or 3 months later. Very common kind of occurrence. This is not unique in terms of there being revisions. What was a little bit surprising, and I would say this to the broad market overall, what was a little bit surprising is the amount of revision in terms of job creation here over the last year. And it really was a sizable number, that 818,000 that I'm talking about, coming out from the Bureau of Labor Statistics. In my end of the universe, it was surprising. And it was the kind of thing that definitely caused some pause looking at the past data in terms of job creation here, because you've heard me talk about pretty much nonstop about how impressive the job creation / unemployment numbers have been. So job creation in terms of growth, unemployment in terms of lack of a spike in unemployment has been pretty surprising here, considering what the Federal Reserve has done with interest rates over the last 2 years. So very interesting. I don't want to get too caught up in it. It's a single data point, but it's definitely worth noting. And certainly, and this is where we're going to feed into it here as we talk about where the Federal Reserve is right now, especially coming up to their September board meeting, when there is, in my end of the universe, near universal agreement that there's going to be a cut in interest rates, so the overnight lending rate from the Federal Reserve here in their September meeting. That has, yes, some bearing, not nearly as much as folks are going to want to think in terms of what that means for mortgage rates and auto loan rates. It's going to have some bearing, not as much as you may anticipate or maybe hope that would happen in that kind of space, but definitely moving in that direction. With this revision in the numbers, though, from a new job creation aspect, certainly with regards to the algorithm that the Federal Reserve Board of Governors use in looking at where things are today and what they anticipate going forward, I would be in the camp, and there was a lot of this blown around in the financial universe today. I would be in the camp that says that this is going to be another variable which would indicate that they are going to cut rates starting in this next meeting. So interesting. Literally a month ago, 50% chance. In my world, near 0% chance, at least insofar as my analytics were concerned. And boy, we've pivoted. So we're probably going to get a quarter point. I know a lot of market folks out there wanting a half point. Don't see that. Really don't see that at this point. Those kinds of things are reserved for more extreme circumstances, and we're not in an extreme circumstance, no matter what anybody says at this point. But it does seem to indicate we're going to get a quarter point adjustment, and we're going to talk a little bit more later on in today's show about market-wise what that means and what things you may anticipate. Again, as I mentioned here just a few seconds ago, I don't anticipate that you're going to be able to notice it in measurable ways in your day-to-day, week-to-week, month-to-month kind of experience at this point. Are we going to see a tick down in mortgage rates? I think we've already seen it. I think the market's already starting to bake that kind of thing in, especially with the drop that we saw here in the 30-year fixed mortgage last week, when this became much more of a reality in terms of market expectation. Not done yet, but in terms of market expectation in September. I think when we dropped down on that 30-year fixed, I think we hit about 6.35 on the average 30-year fixed mortgage. I think the market's already starting to price it in. I'm certainly seeing it with CD rates. Very interesting on CDs. So we've had an inverted yield curve. I know, stay with me here, I'm not going to lose you. Inverted yield curve insofar as interest rates are concerned here for the last 2 years, which generally is indicative of a recession. Hasn't happened, at least in the academic sense, with any kind of significance. But what it has meant, is that with interest rates, when you're buying CDs, you're actually paying more on an annualized basis to have a shorter maturity than a longer maturity. See, it doesn't make any sense. You're getting paid a higher interest rate for a short-term CD on an annualized basis than a long-term CD, and it should be the opposite of that. It hasn't been the case. Definitely seeing that, though, with regards to the market's anticipation of an interest rate cut impacting those rates on CDs. And so, what does all of that mean? It means you might see a little flutter down in maybe a little bit more of a flutter down in mortgage rates that are sitting out there. I wouldn't get too excited about that. I'm more conservative when it comes to those kinds of things. So I don't want you to say, well, wow, it's going to be a chance to refinance. Maybe, depending upon what interest rate you're paying right now, but most likely for most of us who are listening right now, not going to be an opportunity to do that. Maybe a little bit of a flutter down in terms of automobile loan rates. Probably not enough to have meaningful impact on your monthly payment at this point. Where we are seeing it, it's notable when we're looking at it. CD rates, treasuries, other kind of fixed income instruments that we're paying annualized, especially on the short end of the curve, closer to 5% per year. Starting to see 4.75s, 4.6s, even 4.5s on that. So again, a little bit academic, but important to keep in mind. All right, folks, we're going to take a couple of seconds here to hear from our sponsors. I appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. Hang with us as we come back on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
I don't really know what we did to deserve this, but we'll accept it without any reservation. Beautiful weather continues for the rest of our work week. Plenty of sunshine today. Still low humidity. Temperatures climb up to around 80 for this afternoon. We fall back tonight into those upper 50s around the outlying spots and farms. Could see mid-50s by early Friday morning. Sunshine, low 80s for Friday afternoon. Weekend still in great shape. Gets a little more humid, a little hotter next week. That's your forecast for the WSIC Weather Center. I'm meteorologist Chase Myers.
The app with Lake Norman deals. The WSIC app is out now, wherever you get your apps.
Here is your WSIC community calendar. Langtree, Lake Norman, and Mooresville has free music this Thursday featuring a concert by Third Rail. Third Rail presents their high-energy show of rock and roll cover songs, while Langtree is open for food and drinks. Event time is 6:30 p.m., music begins at 7, and the Langtree shops off Exit 31 from I-77 are open all day. Grab your lawn chairs and enjoy Langtree Live this Thursday night with a free concert by Third Rail. Brookdale Village in Huntersville continues their Friday night Live Under the Oaks concert series with music from Dukes and Smith. The Dukes and Smith Band provides an energetic mix of pop, rock, country, R&B, and beach music. Come and enjoy all Brookdale Village has to offer with the free Dukes and Smith concert beginning at 6 p.m. Friday at Brookdale Village in Huntersville. Downtown Mooresville presents the Downtown Summer Sidewalk Sale this Saturday. Join locally owned businesses for hot sales. Come shop till you drop in downtown Mooresville on Saturday. Davidson presents Concerts on the Green Saturday. The Dave Matthews Tribute Band plays from 6 p.m. to 8 p.m. on the Davidson Village Green. Enjoy this free performance on Saturday night in downtown Davidson. On Saturday, September 7th, see the top riders from the Monster Energy AMA Supercross Championship as they compete on a custom-built course at ZMAX Dragway. The playoff opener features a two-moto format for the 450cc class and the 250cc class, promising plenty of drama and excitement the moment the gates drop. The Super Motocross Fan Fest is a pre-race event taking place from 8 a.m. to 2:30 p.m. where you can see the teams practice, prepare, and qualify for the playoff round and is included with your event ticket. Don't miss the biggest Super Motocross race of the year. Visit CharlotteMotorspeedway.com or the CMS app for information and details. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
It's Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second quarter of today's show, football reference. I mean, it's football season. I know you basically hear me talk about football every single week. I don't apologize for that. We've got football here, we got food, and we try to sprinkle in some finance. You see how that went together? That alliteration there? That's your 10-cent phrase for today. 14 days, producer Joe told. By the way, also of our sports director here at WSIC, he's going to be coming up right after me. He's going to give you all the stuff that you need to know about what's happening in the sports universe. I want to make sure that you stay tuned after this week's version of Dollars and Cents. 14 days until we're at football season. I'm ready. I'm ready. And by the way, just in case anybody's wondering, all you Carolina Panthers fans, we, as of this moment, continue to have exactly the same probabilities that we will win the Super Bowl as everybody else, meaning that we have the same record as everybody else at this point. So we have exactly the same probabilities, and I'm looking forward to that. 2 weeks, it's going to happen. Thursday night, NFL. I mean, it is pretty awesome. Once you get into football season, that basically every day of the week you can find a live football game on television. We just keep expanding it to the whole week. I love it. Anyhow, appreciate you hanging with us here into the second quarter of today's show. I was left you with a lot of academic noise there in the first segment. I know it gets a little boring, gets a little dry. I mean, if you're like me, it kind of takes you back to an economics class in college where it was a lot easier to doze off than it was to pay attention. But I'm telling you, folks, when it comes to interest rates, it does affect you in so many ways, shapes, and forms. Truly does. And you may not look at it that way. You may not look at it unless you're applying for a mortgage or you're trying to get a car loan or a line of credit or something else that is, or if you're getting a CD or some other kind of thing that is interest rate sensitive. You may not be paying attention to it that much. But folks, when I say that we have higher interest rates, remember those higher interest rates also apply on the cost end of things for businesses and for corporations, for their lines of credit, for their financing operations, so that if it's more expensive for those companies to do business, it's not this binary. I understand that. I'm not trying to oversimplify it, but this is absolutely part and parcel to the algorithm that if it's more expensive for those companies to do business, it's going to be more expensive for you to buy the goods and services that they offer. Just is. You know that. That's math. I mean, yes, do some companies, quote, eat, unquote, some of that expense? Sometimes they do. Yeah, absolutely they do. But they can't do that all the time. And so you're going to see that pass through. We've seen that this year. Go to the grocery store. I mean, my goodness. And I'm not casting indictments on the grocery store. I'm certainly not going to make this political. I know there's been a lot of noise on the political end of things. Not going to touch that. I'm just simply saying that it is more expensive to go to the grocery store, significantly more expensive than it was just a couple of years ago. And in part of the reasons that's true are both from the manufacturer end of things and from the grocery, the delivery end of things, meaning the retail experience when we walk into the store, that it is significantly more expensive for the manufacturer to produce, and it's also much more expensive for those grocery stores to deliver that to you. When you talk about cost of labor, you talk about cost of raw materials, you talk about real estate expense, all of it is dramatically more expensive, and so the prices have gone up. Notably. And again, I'm not going to get into the political aspect of things. I understand they're pretty heated opinions on both sides of that. It's a reality. It's more expensive to buy the same things right now than it was a year ago, 2 years ago, 3 years ago in significant ways. So when we look at that from the cost of doing business aspect, a variable or an input, if you will, in that algorithm is interest rates. It's more expensive for lines of credit. It's more expensive for capital appreciation. It's more expensive for financing operations. It's a huge input into that mix of things. So that's why I spend time on it. I appreciate you indulging me, but it does have an impact on all of us, and it's an important thing to keep in mind. All right, let's keep going here. So we talked about interest rates, talked about academic ends of things. You heard me talk about how I dozed off in economics class. Definitely was true. So what would be a natural pivot? Yeah, food. You betcha. Chick-fil-A, I heard on Good Morning LKN again here this morning, they were talking about, I have not verified this. I absolutely believe that what they were saying is true because they're reading it off the internet, and because everything on the internet is absolutely true. Not exactly true, but everything on the internet is at least on the internet. That's what we could say, right? Did I hear Chick-fil-A's coming out with tacos? Are you kidding me right now? Tacos? I mean, what? So we got fried chicken and tacos. I don't think there's anything. I mean, goodness gracious, give me an ice cream cone on top of that and just put me to bed. I mean, that's all we need at that point. Heard that was out there. Another thing that they're doing, saw this, and again, it was on the internet, so it may or may not be true. Chick-fil-A coming out with a streaming service, and yeah, streaming like online television, video kinds of things. It's out there, folks. No, don't believe me. You don't have to believe me. Chick-fil-A, not a publicly traded company, which I know there would probably be, let's say, more than one person who would like the opportunity to invest in Chick-fil-A as an investment, but not a publicly traded company, so a private company, but certainly almost completely ubiquitous here in the Southeast part of the country, but very, very successful selling fried chicken sandwiches. I mean, what's not to like? Fried chicken and now tacos? Stay tuned. We'll see if that actually pans out. No pun intended there when we're talking about the cooking end of things. All right, let's pivot here a little bit. Let's talk about a couple of companies that came out with earnings this week. Like I said, we're on the back end of the earnings season, so we're not seeing the same kind of deluge of data from an earnings standpoint that we saw here for the last couple of weeks. So things are starting to slow down a little bit. We got a big one coming this week, big in terms of the size of the company and certainly in terms of the popularity of the company. We got NVIDIA coming out this week. Nancy, Victor, David, Alpha. Not a recommendation to buy, sell, or hold NVIDIA, but really just saying it because they're one of the the $1 trillion market cap companies that are out there and going to be reporting. Going to be very interesting to see. Has been a very, very strong run for NVIDIA, but they're also very, very expensive in terms of the internal metrics of quantifying what a company is worth. So it's going to be interesting to see that. But I'm mentioning this next one on the other end of things, which has had some real challenge in the cloud computing end of the universe. So no, they're not in semiconductor design or manufacture like NVIDIA and like companies are, but it's they do have a very cool ticker symbol, but they have not had a good run here recently. And that's a group called Snowflake. Literally, that's the name of the group, Snowflake. Ticker symbol, you may guess it, SNOW, Sam, Nancy, Oscar, William. Not a recommendation to buy, sell, or hold Snowflake. But in the cloud computing end of things, had a tough couple of quarters, came out with another one. And what was interesting about this one is They actually beat the expectations, lowered expectations because they've had a tough run here over the last half year or so. But they beat those expectations, which was good, right? Isn't that what the company wants to do? But really got hammered, down about 8 to 10%, I think almost 12% by the time it came on air here today. And it wasn't so much the fact that they beat expectations for this quarter, but what they were talking about for subsequent quarters. Their outlook, very, very modest. And in part, they were I'll say it. They were blaming it on the fact that they're not able to monetize AI, artificial intelligence related parts of their business as fast as they would like. So their growth metrics, or what they're anticipating for growth of earnings here over the next several quarters, and they went into most of 2025 in the course of their earnings call. It was not nearly what the market was anticipating. Very, very modest, certainly in terms of cloud computing or anything that's been touching AI here recently. Very, very modest in terms of their growth. Not going negative, not pulling back, just not at the growth levels that the market obviously was desiring for that. So they've gone from tough to tougher in terms of their stock price experience. Very, very interesting to see that because, Snowflake came out here several years ago going public. To a lot of fanfare, and they really were. I don't want to say a darling, but they were certainly highly anticipated when they went public, and have really had a tough go of it here. They had their CEO indicate that he was going to be stepping down. That had a hammer effect on the stock price, and now good earnings relative to expectations for this quarter, but very disappointing as far as the market was concerned in terms of what they're expecting for subsequent quarters going into both calendar and fiscal year 2025. So we're going to watch them. Kind of interesting. They're definitely a player in the mix, and so we want to be mindful of what they're doing, and certainly we're going to keep track of that. Again, not a recommendation to buy, sell, or hold Snowflake company. Let's pivot a little bit, going retail. You went a little negative. Let's go positive on this Target. Now, don't tell me you don't know what Target is. I mean, my God, Target's almost a social experience anymore, and maybe it has been. I'm not exactly. Let's say I'm not gifted in the realm of understanding retail attraction. Is that a 10-cent phrase that you want to keep with you there? What I'm saying is I don't shop that much, actually, at all. And there are those who shop frequently, who are very gifted in understanding the values, perhaps, of a retail shopping experience. I'm not that person, but what I can do is take a look at what Target did. Target, ticker symbol TGT, Tom Green Tom, in terms of the ticker symbol. Not a recommendation to buy, sell, or hold, but boy, did they come out hot. And the market loved it. I mean, not only in terms of the sales figures and frankly net profit figures that they shared here with their most recent quarterly earnings, but also their expectations going forward. Now, as part of that report, it was interesting to hear them talk about the consumer. You heard me talk about this last week with Walmart earnings. Walmart, significantly larger than Target, and yes, probably more indicative of a larger buying base, but Target very, very popular as well. So definitely an indication about where the consumer is. I would say positive. I mean, just like Walmart last week, positive in terms of what they're indicating for the consumer, but definitely changes in consumer buying behavior. And we're seeing this with high-end retailers. I'm looking at Hermes, I'm looking at Tiffany, that those markets are shrinking in terms of the number of folks who are spending dollars at the high-end level. Still folks out there who are doing it, but the number of folks in those brackets shrinking. Definitely a larger and a let's say a growth or an expansion in the number of folks who are buying at the less expensive end of the retail experience. That's what Walmart said last week. Definitely said that with Target this week. We're going to be talking about another retailer here after we get back from the break. But very, I would say, impressive to see the ways in which Target has pivoted some to be able to accommodate those retail desires, or the retail shoppers' desires, where they're seeing the opportunities. And again, their go-forward kinds of, let's call them predictions for what the next several quarters are going to bring. Very, very positive. Very interesting to see. We're going to watch them because that's what the consumer does. Remember, 3/4 of our economy, what the consumer buys. Appreciate you folks hanging with us here on Dollars and Cents. Hang with us as we hear from our sponsors here on WSIC.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
I don't really know what we did to deserve this, but we'll accept it without any reservation. Beautiful weather continues for the rest of our work week. Plenty of sunshine today. Still low humidity. Temperatures climb up to around 80 for this afternoon. We fall back tonight into those upper 50s around the outlying spots and farms. Could see mid-50s by early Friday morning. Sunshine, low 80s for Friday afternoon. Weekend still in great shape. It's a little more humid, a little hotter next week. That's your forecast for the WSIC Weather Center. I'm meteorologist Chase Myers.
We're at Black Automotive. The Buick Encore GX is now at a low 0.9% for 36 months or a $3,000 rebate. Or the Buick Envista is also 0.9% for 36 months. And there's more here at Black Automotive Station.
Prioritizing your health is one of the best ways to take care of yourself. From routine visits to the joys of pregnancy to the illnesses that stop you in your tracks, Iredell Health System will be by your side. Learn more at iredellhealth.org.
Hi, this is Bob McIntosh with the McIntosh Law Firm in Davidson. Since 1997, we have been committed to providing our clients with competent, caring, and experienced legal services. Learn more at McIntoshLawFirm.com.
The feeling of awe. You know, when you walk through the door on a hot summer day and the cold air hits you. Folks around Charlotte have been feeling that for over 40 years, all thanks to Horn Heating and Air Conditioning. HornHVAC.com.
This is Fred Lowry at Lowry Drug. We now have our own brand of full-spectrum hemp extract, also known as CBD oil. I personally manage this product as it was grown on my farm here in Iredell County. It was then processed and bottled here in Statesville. This is a true herbal extract with all the medicinal components intact. A product you can trust to be authentic. And since there is no wholesaler, it's at a price you can afford. Try it at Lowry Drug on Hartness Road in Statesville.
DrumLandscapeSupply.com. DrumLandscapeSupply.com. DrumLandscapeSupply.com.
Honey, what are you doing?
Oh, I figured if I rubbed my lawn and said DrumLandscapeSupply.com, I'd have the dream lawn I've always wanted.
This is a Bloomberg Money Minute. Minutes ago, ahead of Wall Street's closing bell, and stocks are on track to end the day lower. That's on worries about whether Federal Reserve Chair Jerome Powell, at a speech tomorrow from Jackson Hole, Wyoming, will talk about a more gradual approach to lowering interest rates. That's got the Dow down 0.5%, the NASDAQ down 1.5%, the S&P 1% lower. A surprise gainer today, shares of Peloton soaring 37% higher. That's after a strong earnings report and signs that the struggling exercise bike makers' store closings, cost cuts, job losses, and other turnaround plans are working. The U.S. labor market holding steady. First-time jobless claims last week up by just 4,000, right in line with forecasts. And there was good news in the uneven U.S. housing market today. Existing home sales rose in July for the first time in 5 months. And Freddie Mac says mortgage rates fell to a 15-month low this week, just 6.46%. Tom Busby, Bloomberg Radio.
Making your money make sense. Dollars and Cents with CFP Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us. Second half of today's show, Football Reference. And we're in it. It's football season. You're going to hear me just talk about it periodically. I just got the word from our sports director, Joe Berg, because I was asking, I talked about the NFL being ready to go here in 2 weeks. College season? Yeah, we're here. 2 days. This weekend, they're going to take advantage of it, right? They're going to get a little television time before the NFL certainly comes in on Sundays. So we're going to get, I think we're going to get a pretty steady blast after talking with sports director Joe Berg about the upcoming college football season. I love that stuff. That's great. So I don't even have to wait. By the time we get together here next week's version of Dollars and Cents, I'll probably be talking about some of the scores and the games coming up with the who's in, who's out. This whole portal thing, the whole NIL, it's a changed landscape, folks. It really is a very different universe for big-time college athletics, and certainly football is at the top there. So we'll be talking about it. But in the meantime, here on Dollars and Cents, appreciate you hanging with us. Second half, talking about Target, the retail department store, right there before we went to break to hear from our sponsors. And TGT, Tom Green Terry is the ticker symbol. Not a recommendation to buy, sell, or hold them, but talking about how they came out with some impressive earnings. Somebody else in the retail space kind of teased it up there right before we cut out there. TJX, and you may not know them by that ticker symbol, Tom Jerry X-Ray, but you may know them by TJ Maxx. And certainly in terms of a retail space, we're talking about the consumer, not a recommendation to buy, sell, or hold TJX, by the way, but came out also with some very positive earnings, quarterly earnings, talking about the consumer and specifically where the consumer is strong or where the consumer, let's say, is moving or certainly leading based upon, and this is always look back data. So yes, they're talking about what they anticipate going forward, but in terms of the actual numbers of experience, obviously always look back data. And still very, very interesting. The consumer definitely shifting when we're talking about the masses. We saw that with Walmart. We saw that with Target. We see it with TJ Maxx here in this example. We've seen it also at the higher end or more expensive end of the universe, talking about the Tiffany's of the world, Hermes, and like Louis Vuitton is also in that mix. I mean, we're seeing changes in behavior. Now, when I say change in behavior at the upper end of things, as I mentioned right before we went to break there, I'm not talking about necessarily that end are buying necessarily less expensive things, just fewer folks who are buying at the high end. I guess there would be an implication that there are folks then who are moving down the scale in terms of what they're spending on more expensive things, meaning they're spending less. But still a market there. It's just a smaller market. And where we're seeing larger participation, definitely at the less expensive end of the market. That's what we've seen with Walmart. That's what we've seen with Target. That's what we've seen at TJX. So what does that mean as far as the overall consumer is concerned? Well, you couple that with some other data out there about where the consumer is right now in with regards to their mortgage, with regards to auto loans. We still have tight unemployment. When I say tight, that's a good thing, meaning that the unemployment rate is still, in my world, still historically low, even though it bumped up from 3.7 to 4.3. That got the market all excited here a couple of weeks ago. I'm not worried about it. Not really. This is my commentary at this point. Not worried about it. When I look at the 70-year history of average unemployment in this country, closer to the 5.5 range, almost 6%, depending upon how you measure it and the variables you use in the algorithm. Yeah, 4.3. I'm not worried about it, and I'm not saying that to be casual about folks who are unemployed and looking for a job, but rather to say on a macro level. So this is academic. On a macro level, that's not a level at which there should be concern, but we are. And I think it's because of what do we call it? Proximity bias, right? Those things which are relatively close to us tend to influence our decisions much more so than things which are further away. There definitely is the case here. The fact that we've had low unemployment for such an extended period of time, a little bit of a tick up or let's say a larger than expected tick up in unemployment causes a more exaggerated kind of response. And I think that's what we're seeing here right now. So definitely something we're going to keep in mind. Got to couple that in. We get weekly jobless claims the morning of every time I'm on here on Dollars and Cents presented by North Main Financial. Always comes out on Thursday mornings and 8:30 in the morning. If that's the kind of thing that you want to check it, I hope not. I hope you're not the crazy end of the universe like I am, who literally is listening at 8:28, waiting for 8:30 for those claims to come out from the Bureau of Labor Statistics. But important to note, and I say that because the weekly jobless claims come out, look back the previous week, new claims, continuing claims, those good kinds of numbers in terms of understanding where things are, where folks are work-wise. Pretty even, folks. I mean, really it is. 232,000 this morning on the new claim end of things, almost exactly in line with expectations, almost exactly in line with trend here recently, especially post-COVID, definitely in terms of trend. Continuing claims, again, pretty much perfectly in line at this point, 1.8 million roughly on the continuing claims. That's the number of folks who have been on unemployment longer than a week. And so not a large uptick there. So when we look at the labor market right now, especially when you're looking at a labor force of the size that we have here in the U.S., if we're at a space where we're at 4.3% unemployment, essentially that means, and this is because of the law of large numbers, essentially that means that just about everybody who's looking for a job can find one. It may not be the job they want, but they can find a job. And that's very, very important to understand. That basically everybody who wants to have a job can have one, meaning if there's one available. I'll put it another way. There are more job openings at this point than folks looking to buy jobs by several million, meaning there are several million job openings that are out there that don't have enough people who are applying for them. Now, again, may not be the job that you want, but there are job openings out there. So you see how I'm delineating that. Important to keep that kind of thing in mind because folks often say, well, I'm looking for a job and I can't find one. The implication is not finding the job that I want. and that's important. But certainly when we're looking at macro data and understanding what that means for the overall economy, that tends to be a positive thing, especially with the amount of interest rate hikes that we've had here in the last 2 years. The fact that we haven't had significant upticks in unemployment, I'll raise my hand. It's befuddling to me. It really is. I would have expected us to have a notable uptick in unemployment. I'm not talking about from 3.7 to 4.3. I'm talking 5, 5.5, maybe even 6, because of how much we raised rates. We, the Federal Reserve, raised rates here over the last couple of years. I would have expected that. I would have expected companies to pull back very quickly, to be able to cut overheads, i.e. labor costs, their most expensive component of overhead in most instances, and we didn't see it. And that just very interesting. Very, very, very interesting. I'm still scratching my head about it. It's an anomaly insofar as this kind of interest rate environment is concerned. Obviously, the kind of thing that we're going to continue to watch. So, all right, I know, a little bit academic there. Stay with me here because you know what we're talking about next. Food. All right, so we talked about Chick-fil-A. So we had fried chicken in there. We had tacos, two of the basic food groups. If you don't believe me, go check the FDA. Don't do that. Don't check the FDA website. They're not going to tell you that fried chicken and tacos are part of the essential food groups, even though they should. No, we're going to go to the other end. We're going to Krispy Kremes. Chris, I mean, if you are in any way connected to the great state of North Carolina, you better know what Krispy Kremes are. Even if you don't like them, you better know what they are. Started out of Winston-Salem here, publicly traded company, and they also have one of these really cool ticker symbols, David Nancy Umbrella Tom, DNUT. I mean, of course they do, right? It's Krispy Kreme. I mean, donuts, hot and ready. When that sign's blinking, it's time to go in that place. Anyhow, they got this very interesting, and by the way, not a recommendation to buy, sell, or hold Krispy Kreme stock, and as a publicly traded company. They announced they have this collaboration with Keurig Dr. Pepper. Now, when I say Keurig Dr. Pepper, you think, well, Keurig coffee, Dr. Pepper soda. That's correct. So this is a merger. They have several different let's call them retail drink business arms that they have. I'm looking most especially at the Dr. Pepper end of things, which, by the way, publicly traded company, Kelly David Paul, KDP, is the ticker symbol. Not a recommendation to buy, sell, or hold Keurig Dr. Pepper. Here's where it matters. Krispy Kreme, in collaboration with Dr. Pepper, to make Dr. Pepper flavored frosting. I'm going to say that one more time. You get a standard, when I say a standard, I'm talking about glazed, right? Glazed donut from Krispy Kreme, and on top of it, Dr. Pepper flavored frosting. Now, being an honest North Carolinian, I have to say I wish they would have done Cheerwine, right? I mean, Cheerwine frosting, it definitely would have been higher on my radar screen. But I'll take Dr. Pepper. Dr. Pepper frosting? Are you kidding me right now? It's out there. Check into it. You don't have to believe me. Take a look at what's out there. Dr. Pepper flavored frosting on your Krispy Kreme donut. Pretty good stuff. All right, let's keep going here. I'm going to give you one more food. Well, I'm going to give you another one after the break, too. One more food item here. And this is, again, just those things that just make life worth living. Buffalo Wild Wings, not publicly traded, owned by a big group called Rourke Capital. Rourke Capital has a number of banners that they own. Arby's, Sonic, Jimmy John's, Dunkin' Donuts, Baskin Robbins. It's not Dunkin' Donuts anymore. It's just Dunkin' now. Own a bunch of them. They also happen to own Buffalo Wild Wings. Coming up, Buffalo Wild Wings coming out with their, let's call it, bacon-centric menu, which includes, hold on to it, bacon-flavored sauce for chicken wings. I mean, if that doesn't combine two of the most beautiful things in this life, we're talking fried chicken wings and bacon-flavored sauce. Now, I've not had it, but yes, I will be the one who is willing to try to see what that means. They also apparently have a number of other items on their menu, which are bacon-centric, which it doesn't even matter after that. You could put an old tire up there with bacon on it. I probably would at least give it a glance to see if it's palatable. But very interesting. Buffalo Wild Wings coming out with that. Definitely trying to take care of the bacon craze out there as well. So we got Krispy Kreme donuts with Dr. Pepper, and we got fried chicken wings with bacon. I think that covers it, folks. So when it comes to the food end of things, but certainly kind of interesting in these collaborations. The reasons why they do it, obviously, to increase sales. They want to be able to take advantage of segment of the market maybe they're not touching at this point. Certainly want to increase those sales and increase those margins as they do. Well, friends, we're going to take a break here as we get ready for the fourth quarter. Hang with us here on Dollars and Cents with WSIC.
There's more of Dollars and Cents with Certified Financial Planner Joshua Dobi on the way from 105.9 100.7 WSIC.
I don't really know what we did to deserve this, but we'll accept it without any reservation. Beautiful weather continues for the rest of our work week. Plenty of sunshine today. Still low humidity. Temperatures climb up to around 80 for this afternoon. We fall back tonight into those upper 50s around the outlying spots and farms. Could see mid-50s by early Friday morning. Sunshine, low 80s for Friday afternoon. Weekend still in great shape. Gets a little more humid, a little hotter next week. That's your forecast for the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Langtree, Lake Norman, and Mooresville has free music this Thursday featuring a concert by Third Rail. Third Rail presents their high-energy show of rock and roll cover songs, while Langtree is open for food and drinks. Event time is 6:30 p.m., music begins at 7, and the Langtree shops off Exit 31 from I-77 are open all day. Grab your lawn chairs and enjoy Langtree Live this Thursday night with a free concert by Third Rail. Brookdale Village in Huntersville continues their Friday night Live Under the Oaks concert series with music from Dukes and Smith. The Dukes and Smith Band provides an energetic mix of pop, rock, country, R&B, and beach music. Come and enjoy all Brookdale Village has to offer with the free Dukes and Smith concert beginning at 6 p.m. Friday at Brookdale Village in Huntersville. Downtown Mooresville presents the Downtown Summer Sidewalk Sale this Saturday. Join locally owned businesses for hot sales. Come shop till you drop in downtown Mooresville on Saturday. Davidson presents Concerts on the Green Saturday. The Dave Matthews Tribute Band plays from 6 p.m. to 8 p.m. on the Davidson Village Green. Enjoy this free performance on Saturday night in downtown Davidson. On Saturday, September 7th, see the top riders from the Monster Energy AMA Supercross Championship as they compete on a custom-built course at ZMAX Dragway. The playoff opener features a two-moto format for the 450cc class and the 250cc class, promising plenty of drama and excitement the moment the gates drop. The Super Motocross Fan Fest is a pre-race event taking place from 8 a.m. to 2:30 p.m. where you can see the teams practice, prepare, and qualify for the playoff round and is included with your event ticket. Don't miss the biggest Super Motocross race of the year. Visit CharlotteMotorspeedway.com or the CMS app for information and details. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Call now to speak with Certified Financial Planner Joshua Dobi at 844-STUDIO-4. It's Dollars and Cents on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here into the fourth quarter, 12 minutes exactly, until we get to that 5 o'clock hour if you're a 9-to-5er, and I appreciate so much hanging with us here as we're giving attention to all things economic and financial. And right before we were going to break there, because you know we do that on this show, we were talking food, and I mean, food's a big business. Right, I mean, you can't disagree with that, right? We're even bringing publicly traded companies. I mean, Krispy Kreme's a publicly traded company. Keurig Dr. Pepper is a publicly traded company. Rourke Capital, not publicly traded, but is one of the largest owners of quick serve restaurant franchises here in the literally in the country. Got to bring out one more here. I was just sharing this with producer Joe as we were on break, and we got to talk about this. I mean, it's also a publicly traded company. So Kraft Heinz, KHC, Kelly Henry Charlie, not a recommendation, buy, sell, or hold Kraft Heinz. But when you think of Kraft Heinz, you probably think of two things: Heinz ketchup and Kraft mac and cheese, macaroni and cheese. Got to say this. I mean, when I came across this, this is something I definitely have to share. A, because it's a publicly traded company. B, because I may have two young daughters who have eaten, I would say, more than their share over the course of their lifetimes of macaroni and cheese. Came out with two new flavors of macaroni and cheese. You don't even have to add anything to it. They got flavors baked into it. Literally here. Two of them, you probably could guess, or at least one of them I'll bet you could guess. One of them, ranch, not surprising. The other one, jalapeno. Ranch and jalapeno Kraft macaroni and cheese. Here's the fun part. Yes, they are available here soon, and they're going to be, I'm sure, going to be on the grocery store shelves for you to take a try at it. But one of the most interesting things, as I was doing research on this, Kraft Heinz, apparently as part of their research process, this is really cool, they tried 27 different flavors. Now, how would you like to have that job? I mean, really, I mean, you're the one. Your job is, please come into work today, and we would like you to try these various flavors of macaroni and cheese, and to give us a thumbs up or thumbs down, and then be paid for that. I mean, there are some pretty cool jobs in this life. I've got to put that one up there. I mean, truly, you got to kind of, I mean, as long as that has like something sweet on the side, like Krispy Kreme donut with Dr. Pepper frosting that we talked about here in the last segment. But it would be amazing to try all 27 at one time, though. I mean, you got to have a palate cleanser in there, right? I mean, you got to have something more than water, because that's pretty powerful flavor if we're talking about how that goes together. But yeah, the two they settled on, the ranch and jalapeno. So if you're a Kraft macaroni and cheese person looking to spice it up, literally here a little bit, make sure you're looking for that on your grocery store shelves. All right, you got food. I mean, I did the academic end of things. I figured I had to spend a little bit more time on football and food here as we're talking finance, alliteration, and but now I got to get you back into the academic here a little bit. This is it is affecting all of us, and it's going to affect us as we continue to move into the cooler months of the year. Very interesting dynamic when it comes to crude oil and natural gas markets. And I'm saying this from a pricing standpoint. Both crude and when I talk crude, I'm talking about West Texas Intermediate, WTI, priced out of Cushing, Oklahoma, meaning the spot price out there. And I'm looking at London for the spot price on the 1,000 thermal on natural gas. When we're looking at the spot pricing for both of those, especially natural gas, substantially lower than we would anticipate for this time of the year. Now, natural gas tends to get quiet during the summertime because not as much cold weather. Not as much cold weather, not as many folks firing their natural gas heaters and natural gas furnaces, so you're not going to have the same kind of effect. The industrial use, yes, is much more constant, but in terms of residential use, definitely a quieter time in terms of usage during the summertime. That was already baked into the assumptions, and we're still below that. West Texas Intermediate bouncing down in the low 70s again, and it's really for both natural gas and for crude oil, really is a function of supply, meaning we have more supply than demand. Now, the word glut gets thrown around a lot when it comes to oil and natural gas. I don't want to say we're in the glut phase where we have so much excess inventory that there is this hard ceiling or depression on prices, but it is certainly true that at least in the near term, that we have notably more supply than is immediately needed, both for crude oil and for natural gas. Now, crude oil, where we see that from a refining process, that's what gets to our gas pumps. That's what we put in our cars. So we're seeing that we didn't have the more traditional spikes in the price of a gallon of gasoline during the summertime. It's still expensive, but not the traditional, let's say, Memorial Day to Labor Day spikes that we sometimes see due to the summer driving season or due to the summer vacation season. So that's been interesting to see that. I'm saying all of that to say, okay, that's where we are today. But then especially as we're coming into the cooler months, and I'm looking specifically at natural gas, this might be a positive thing relative to our heating bills. So for I'll say many. Let's do it this way. For many of us here in the U.S., the newer furnaces that we have or newer heat pumps that we have, many of them use natural gas as their energy source. And so there's a direct, let's call it, all right, I'll give you semi-direct kind of relationship between the price of natural gas and the cost of heating homes or heating where we live. And so this could be a positive thing relative to a normalized kind of heating bill. What I'm trying to say in more roundabout kinds of ways is you may have a slight downtick in your heat bill if natural gas continues to stay at these below average prices, which is what we have currently for them. Now, I would anticipate we're going to get a tick up, especially as everybody fires their furnaces once we get through the first frost there up in the Northeast or the upper Midwest. That definitely, as folks are firing their furnaces again, you're going to get an uptick in it. But the question is going to be, is it going to get an uptick all the way up to what's normalized for this time of the year or for that time of the year as that happens? Because right now we're running below average, even for this time of the year when there's far less residential usage for natural gas. So it's something we're watching. It's going to impact us from a budgetary standpoint. It's going to impact us in terms of cash flow. It's going to impact us in terms of what the consumer is able to spend with regards to their discretionary income. So it's real life. That's why I'm bringing it up to you here. It's not just numbers on a page or not just a trading algorithm among folks who are investors, but literally from a usage standpoint and even to the retail usage end of things. If we continue to have lower crude oil prices, chances are we're going to have lower prices at the pump. We continue to have lower natural gas prices. Chances are our heating bills, for those of us who have units that are fueled energy-wise by natural gas, can mean that we're going to have some, perhaps, the opportunity for some lower prices on our heating bills as we get into the cooler months of the year. So very, very interesting on that end of things. Definitely something that's high on our radar screen. We'll continue to talk about it as we make our way into the cooler months here, which, ready or not, are coming, right? I mean, my gosh, Labor Day is about 10 minutes away. At this point, it's not literally 10 minutes away. I'm saying it's very, very close. And as we blaze through the end of summer here, and we're going to be getting into fall, and we're going to be getting into all things that have to do with pumpkin spice lattes and Santa Claus here before too long. I know I'm not rushing it. I'm just saying that's what's going to happen in our retail stores here, again, also in about 10 minutes or so. Not really 10 minutes, but not too far away. It's going to happen. All right, so let's talk markets. I always I leave us to the end. I like for you to hang around, and certainly we want to talk about them, about where things are right now. Pretty resilient, folks. 2 weeks ago, we had a significant downtick due to some unemployment figures, due to some concern about where the Federal Reserve is going to be as far as interest rate reductions are concerned. The futures market is all but guaranteeing at this point. I say all but guaranteeing. That's the futures market. That's an investment. Doesn't mean it's guaranteed to happen, but certainly the futures markets are making the assumption that there is going to be an interest rate cut by the Federal Reserve during the course of their September meeting. That cut at this point is anticipated to be a 1/4 of 1%, 0.25% reduction in the overnight lending rate to member institutions, which means that there will be some level of corresponding reduction through the pipeline. But as I said at the front end of today's show, and I'm going to say this continuously here over the next several weeks, don't anticipate that that is going to be material enough that you're going to say, well, great, well, we can get another mortgage, or mortgage rates are going to adjust dramatically. I would offer up that this is already pretty much baked into the market, that the rates that we've seen here, you heard during the Bloomberg Minute here several minutes ago, that we hit a 3-week low on mortgage rates. The mortgage market's already baking it in. They're already baking in the rate reduction. I don't think that the market is going to move substantially after the rate reduction, this 1/4 point reduction, if it happens in this way, is actually going to have a material effect on the market, because I think it's already there. I think the market's already been pricing it in. So that's important, right? I don't want to get too carried away. And then folks say, well, it's not going to be good for the stock market. Absolutely, for a short time. When I say that in that way, it's not because I'm guaranteeing anything. Definitely can't do that in this business. But because the market tends to move very, very quickly in very, very short amounts of time. And that can be both positive and negative. And that probably is going to happen once the cut actually takes place. But also because we are, I'll say, just amused by the shiny object in the room. That shiny object will go away relatively quickly. And so I don't anticipate that that's going to have a huge effect on the market for the long term. I think there's going to be more of an anticipation, as always happens in this day and age, about what that's going to mean for the Federal Reserve for the next meeting. Are they going to cut at the next meeting? How much is it going to be? And that's where the futures market will be most intense at that time, after the September meeting, assuming a 1/4 point rate cut at that time. It's going to be interesting to see. But it certainly will be taken as a positive for the market. Certainly the market wants lower interest rates, lower cost of capital, lower overhead for publicly traded entities, lower expenses, greater possibility for higher margins. That's what it is, folks, when you're looking at it. That's what it is when the market desires, specifically the equity markets, so desire for that reduction in interest rates. There's an anticipation that that's going to be good for earnings. Earnings, obviously, one of the primary components in most pricing mechanisms to determine the fair value and appropriate trading space for individual securities. So that's what we're seeing out there. So we're going to watch it. Is it going to be a positive in the short term? Probably yes. But don't get too carried away with it. That's important. All right, folks, we're rapidly approaching the end of our time here together on this week's version of Dollars and Cents presented by North Main Financial. Lightning fast recap here. Talking about the Federal Reserve, talking about where jobs are at this point. Not a whole lot that's out of kilter. I really can't say a whole lot that's bad about it. We talked a lot about food today. I mean, literally, we talked about chicken wings and mac and cheese and donuts with Dr. Pepper icing on. I mean, what else is there? Appreciate your time this week, folks. On Dollars and Cents, tune in with us next week here on WSIC.
Serving you better than